Hello everybody. So this is intended to be a very quick video. This is not a deep dive into the fundamental of these 5 stocks. This is simply me highlighting 5 stocks that I've been buying this month and that I intend to keep buying because I see a disconnect between how fast these stocks are growing as measured through the only true metric of growth, in my opinion, which is revenue growth, and the actual stock price. And I think these 5 stocks have a clear disconnect between the explosive growth that they're seeing in their revenue and their stock price. My channel has deep dives on each of these stocks that I will link in the description, but let me just go ahead and get started with the first stock that I'm buying this month is StoneCo. StoneCo, because of a collateral issue on loans in late 2021, the stock has been written off with a bunch of investors and it's crashed. And it's essentially been flat, even though they have resolved their issue with collateral. StoneCo is the Square of Latin America with a little bit of QuickBooks and a little bit of software into it. You can see both of their segment revenues are growing tremendously. In 1 year, this is from their last investor presentation from Q3 of 2022. They've grown revenue 70% year over year, and the stock has not moved a single bit. I believe this stock is extremely cheap right now. StoneCo is a stock that both as Warren Buffett and Cathie Wood own the company, and I believe the company is a tremendous potential, tremendous disruptor in Brazil in the payments space. The second stock I'm buying is HIMS. HIMS is actually still trading lower than its SPAC IPO price. But, I suggest we take a look at revenue growth, right? When HIMS IPO'd, they had in the 30 million of quarterly revenue, and the last quarter, they had 145 million. So you're looking at almost a 5xing in the rate of revenue quarterly for HIMS, yet the stock is still flat, even though revenue on a run rate basis is 5x, and they're expected to post an even bigger quarter this year and perhaps show some profitability this upcoming quarter, which I think would make the stock really spike. In my view, HIMS is a forgotten stock. It is way too undervalued given how quickly this stock has grown. The third company I'm looking at, of course, is Tesla. And one may be tempted to look at Tesla's movement from the trough back in late December of 2022 up to today and look at we're up 90%. What is this? This stock has lost, but this stock has nothing left in it, right? It's up 90% year to date, something like that. But actually, when you look at Tesla, you realize that over the past almost 2 years and a half, the stock is only up 37% over the past 2 years and a half, but revenues are 3.2x higher. So you have revenues that have more than 3x'd, and the stock is only up 30%. If you do a price to revenue or price to sales cost, in 2020, in late 2020, Tesla was trading between 20 and 24 times sales. Today, it is trading at 9 times sales with a $202 stock. Which means that if you got Tesla at $100, near $100, it was ridiculous. You were paying less than 5 times sales for Tesla. And Tesla, I think it's important to highlight. I have never seen a business with so many potential multi-billion-dollar revenue businesses. I can think of new catalysts. I'm not talking about the Model Y, not talking about the Model 3, not talking about all of the ideas that existed pre-2023, right? In 2020, there were plenty of opportunities that justify this stock price that are not in this list. This list includes all new opportunities from Tesla that Tesla has manifested over the past 2 years. I can see 11 of them that could all be tremendously huge. They're opening their supercharging network, right? That could be as big as a network of, say, ExxonMobil gas stations, but they're opening it to all of the EVs. That's a master move. The Tesla semi-truck, the semi-truck could really be tremendous with the amount of savings they can give to enterprise. And don't forget the tax credits and the tax incentives for companies that want to buy trucks are absolutely insane. They're in the multiple dozens of thousands of dollars. You have the Cybertruck. In America, trucks are the number one vehicle. People love trucks in the US. I drive around, I see trucks everywhere. This Cybertruck is going to be the new thing in the truck world that I think is going to take the United States by storm. They may be launching a compact car. We've heard of Project Island for the past few months now, and we know a compact car may be coming, either a change in the Model 3 or a whole new compact car. Tesla megapacks for energy grids. Few people are talking about megapacks, but that could be a tremendous multi-billion opportunity. The Tesla bot, okay, the bot is probably 5 years down the road, but the present value of something like a Tesla bot is just so insane that, it's like you have to include it. FSD, including Dojo, which they intend to rent their supercomputer and self-driving, they intend to rent in the cloud, and they have all of their FSD initiatives. They could sell FSD, rent full self-driving if they solve it. We don't know if they'll solve it. We don't know when they'll solve it, but if they solve it, with the stock price. Tesla insurance could be a major disruptor. And then last year we had the IRA bill. The IRA bill introduced many, many positives, including $7,500 tax credits, including on the Model Y up to $80,000. There's tremendous battery manufacturing subsidies that Tesla is getting. And Tesla is getting a write-off as well on its earnings, a 75% earnings write-off, which is going to be able to help it avoid the alternative minimum tax, a bunch of alternative minimum tax. These are just 11 catalysts. There's more for Tesla that just don't come to mind as I make this quick video, but I've never seen a company with so many opportunities. I believe Tesla is the Standard Oil of our day. If you go back to Standard Oil, back in the Rockefeller days, I believe Tesla is shaping up to be a similar company. All right, what is the fourth stock I'm buying? It's Enphase. Enphase has essentially been flat for 2 years. It's essentially been flat for 2 years. It's only 15%, since early 2021. Yet the sales of Enphase have well over doubled, actually 2.5 times. And if you look at the price to sales ratio that you're paying, right? In late 2020, you were paying a 31 price sales ratio. Today, you're paying 12. This is the cheapest time to buy Enphase that we've had within the past 2 years. And when I see the opportunity in Enphase, when I see the exponential growth curve that they're entering through their microinverter product, through their whole home energy independence system, they are right at the center of this mega trend of virtual grid, of creating your own energy at home. They are riding the cost curves of batteries down and the cost curves of solar energy down. I believe this company is shaping up to be a monopoly in the installation of solar panels in the United States, in Europe, and they're entering new markets. Enphase has a lot going for it. I've covered Enphase many times on the channel. It's literally one of the cheapest. It's the cheapest time in 2 years that one can buy Enphase. The last company. This is a quick video. I'm only covering 5 companies. The last company that I'm buying this month and right now in general is MercadoLibre. Same story as most of the other stocks that I've talked to in this short video. MercadoLibre is trading essentially at the same price as it was in September of 2020. So almost 2.5 years ago, the stock has not moved. Yet what has happened? Right, next quarter, they're probably going to report more than $200 of revenue per share. So that's almost a 2.5x compared to what it was in late 2020. 2.5 times the sales, you're paying the same price. In late 2020, price to sales ratio for MercadoLibre was a 21, and today it's a 6. And this is despite the fact, and the market spiked a little bit on the news, but MercadoLibre hasn't moved at all. The market forgets. The market has like a 10-day news window, which after 10 days it forgets about the good news. MercadoLibre's main competitor in Brazil, Americanas, went bankrupt. They went through fraud, and they're going for bankruptcy. Their main competitor is going through bankruptcy. And we still get the opportunity to buy the stock at the cheapest it's been within the past 2 years. Now, let me conclude by saying that none of this is investment advice. This is not an in-depth video. This is a quick video because I don't have much time tonight. But I really hope you like the entertainment. I hope you like this quick video. I thank you for every like and every subscribe that you give me. I'm very thankful for your time. Have a great day.